Hello and welcome. You're tuned into Buy Now, Sell Now, Nifty Now. I'm Shruti Sharma and with me is Kavita, and we are joining you live from SBI Live Studios. And Kavita, indeed a good day coming in for the markets just yesterday. What a stellar run-up. And even today, Nifty is above that 25,100.
Exactly. We are comfortably holding that level, and also what is important is the kind of Q2 updates that we are getting. But then if you look at the sector-specific movement also, we are looking at autos really doing well, metals are really doing well, and in fact, broader markets are also in tandem with the major indices. You know, mid-cap and small-cap are also up almost 0.5%. But then look at the sectoral performance. Nifty Auto almost more than 0.5% up. PSU Bank today isn't doing well. The index is down marginally, but the private banks are really in action today. The index is also up a little close to 0.5%, but then reality is flat. Metals are also on the flip side, in the sense they are also up almost 0.5%. Having said that, a bit of booking or pressure coming in on the defense side, defense sector. But other than that, if you look at healthcare, that's pretty flat. Oil and gas marginally up, and in fact, even the Nifty India manufacturing, if you look at the all the counters over there are also doing pretty well. So overall, the market is comfortably able to hold on to 25,100 mark, and Bank Nifty 56,321. That's a very important level. In fact, for the Bank Nifty to hold on to 56,300 is going to be a very important support level. But then let's figure out the markets more. I have with us Rajesh Agrawal, Head of Research, AUM Capital. Rajesh, hi, morning, welcome to the show. And we are looking at markets strongly holding 25,100. And what do you think? How soon will we crossing the resistance of 25,200? If this kind of a movement or trajectory continues, do you think that is the resistance which the market will be able to break?
Good morning, Kavita. Good morning, Chris. See, 25,200 is 40 to 50 points ahead, so it's not much of a deal. What I believe is the kind of participation going on in the broader market, that's mid-cap and small-cap. Even if you see on weekly basis, if the indices moved up by 1% last week, broader market was up by 2.5%. That's the kind of participation which we are witnessing in the markets at this point of time, after a long period of time. There are various reasons. One, the Fed came out with a 25 basis point cut. RBI came out with a whole lot of banking reforms, and then the GST reforms, and the kind of festive season sales which we have witnessed now. We are very optimistic on the market, and we believe that by Diwali we might be seeing some kind of momentum in the market till Diwali. Going forward, I think there would always be demand for quality stock, and now with the result season starting from the 9th of this month, TCS starting that. So I think the more focus would be on towards the Q2 numbers and the management commentary that goes ahead, especially on after the kind of Trump tariffs that has been imposed on IT sector as such, because $1 lakh of HIV visa and all those things. So more focus now going forward for the next 1 month would be on the results and management commentary.
All right, so that's the take coming in on the markets. Hi Rajesh, morning. Good to be speaking with you, but we have a lot of stock-specific queries that have already started to trickle in, because in the next 1 hour we're going to address exactly that. And we also have our first caller joining us on the show. We are being joined by Shankar from Tuticorin. Shankar, hi, morning. We have Rajesh with us. Go on and ask your query.
Good morning. Thank you for taking my call. This is Shankar from Tuticorin. I had already 1,000 shares of Nykaa. I booked the profit just 2 days ago, but seeing the stock, it is rising up now. So I'm looking for a fresh entry. Is it the right time to go, or should I wait for any correction?
Rajesh, after that operational updates from Q2, where even the management commentary was very good, 6% jump, another 2% today. He actually sold his share 2 days back, so not a great timing. But do you believe the stock is good for a fresh investment even at these levels?
See, investments, yes. Trading it's difficult to say because the kind of run-up it has seen in the recent past. But for a long-term investment, I think it's a good stock, especially in the new age companies. If you see, this is the only company which has been making profits since very long period of time. Although the profits were very meager, but still it was in black. The stock hasn't done anything since its listing 3-4 years back, and now it has started moving up. Q2 updates were good. Even Q1 numbers were very exciting. I would say there was a huge jump in bottom line and top line. The fashion retail market division, which was not doing that great for the company, has started doing well. Beauty, as it is doing well. It's one of the leaders in that segment. I would say Nykaa is a leader in that segment, of course, because the other players are way far behind it. So I think for a long-term investment, yes, one can go long, and there is a target of around 300 odd rupees in the next 1 year. In the short term, there might be some amount of correction or consolidation because of the kind of run-up it has seen. But for a longer-term horizon, I think around 15 to 20% upside in the next 1 year is quite possible.
All right, so slightly a longer hold time frame is recommended. But then let's move on. Let's take an SMS question. This is from Sandeep, and Rajesh, he's bought Max Healthcare at the price of 11.55, and he's asking the target price for next 2 to 3 months. All right, so chart-wise, in the last 5 days, we've seen almost 1.5% upside with a low of 1061 that the stock has touched. 11.55 is his buying price, and time horizon is for 2 to 3 months. What's the recommendation along with the stop loss?
See, 2 to 3 months is a very small period at this point of time because the stock has seen phenomenal movement in the recent past. But going forward with the kind of focus on healthcare stocks at this point of time, I think the entire sector is going to do well. Because of various reasons. One, the bed to patient ratio is very low in our country, especially in Tier 2, Tier 3 cities. The focus of government on improving healthcare infrastructure, medical tourism that is going on. And not to forget the kind of medical insurance that is being bought by people across the country after the COVID. So that gives impetus to the entire organized healthcare players, I would say. Maxcare Health is a very good company, no doubt on that. One can have a short-term target of 1180, 1185 in the next 2-3 months. But what I would suggest is go for a longer-term time horizon and stick to the top.
All right, so that's the take coming in on both of these counters. But with this, let's move on to another news flow wherein a rift between the members of Tata Trust may affect the business prospects of India's most respected conglomerates. Sources tell ET now that a meeting is set to take place later this week to set the affairs in line on the back of Tata Sons listing deadline and internal dissonance among the board members. Anurag Joshi is here with more scoop. Anurag.
The board of Tata Trust that controls India's biggest business group is meeting on October 10. And this board meeting is coming amid reports of a rift among the board trustees. The differences among the trustees had surfaced at the last board meeting of Tata Trust in September. And these differences are linked essentially to the appointments of new directors on the board of Tata Sons. Vijay Singh, a Tata Trust trustee on the board of Tata Sons, quit last month, and Vijay Singh was said to have been backed by Tata Trust chairman Noel Tata. Speculation has been rife that the acrimony at Tata Trust might impact board appointments at Tata Sons in the future. And the development comes amid the passing of the deadline for Tata Sons for listing its shares according to the RBI guidelines. In September 2022, RBI had given upper layer non-banking financial companies, and Tata Sons is treated as such by the central bank to list their shares within a 3-year time frame, and that deadline passed on September 30. The Tata Sons had earlier this year applied for the deregistration as a core investment committee, and earlier had also repaid all the debts on its books towards bolstering its case to seek an exemption from the listing requirements of the RBI. Meanwhile, Tata Capital's $1.7 billion IPO is currently on, and it closes on October 8th.
All right, a very important update. Thank you so much, Anurag, for getting us this news. But then it's time for a quick break, and post that we have our viewer queries lined up, and we also have Rajesh Agrawal as an expert who's answering your livestock queries. In case you want to put on your question, we'll be flashing our WhatsApp number. Quickly send us your queries, and we'll get it answered.
Take all your stock related queries, and continuing the same, we have our next caller with us. We have been joined by Praveen from Chennai, and from the guest side, we not just have Rajesh with us, but now Osho is also joining us on the show. Very good morning, gentlemen, and Praveen as well. Good morning. Go on. We have our experts ready. Go on and ask your query.
Good morning. Thanks for taking my question. I have around 100 shares of TCS bought at around 3,600. Long-term investor. Also hold some stocks in HCL and Infy from the large cap IT space. Given the muted outlook for the IT sector in general and TCS in particular, what should one do with the stock? That was my question.
No, fair point. But Rajesh, let me just take it from you itself, given the fact that the earnings have been not that great of late. We have seen so many news flow and negative news flow rather around whether it's H1B visa, what AI is doing, and the layoffs as well. But Rajesh, sometimes it's good time to actually looking into these sectors when the news flow around is so negative. Do you agree with this view when it comes to the IT counters? And specifically, what's your take on TCS, HCL and Infosys?
Especially IT has been in a bad weather since some time now, and I think all the negatives have been discounted especially in the large cap names. There have been reasons to believe that there would be a slowdown in discretionary spends and all, but since the first rate cut has already happened from the Fed, and 2 rate cuts has been signaled, maybe it might be happening in this year only. So that's a very great point for these companies because discretionary spends are going to up, and which are a good thing for these companies. Secondly, the kind of order book they still have, despite all those negative environment going on, is quite commending, I would say. The balance sheet is very strong. As far as TCS is concerned, the cash conversion is very strong for the company. It's got a good balance sheet, good order book still at this point of time. I think it's high time people with long-term horizon, by long-term I mean at least 18 to 24 months, start nibbling in these stocks, especially in the large cap names like TCS or Infosys, or in the mid cap space like Persistent or Intellect Design. These are some of the good names which one can hold for a long period of time.
All right, so that's the view on the entire IT pack. But then let's get connected with our other viewer. We have Anup from Goa on the phone line. Anup, hi, good morning.
Yeah, good morning to all of you. My question is regarding Patanjali Foods.
Okay.
I had around 882 shares of Patanjali now. I got some of them from the FPO, some of them from the bonus.
Sure.
And my average price is around 216. So I would like to know whether to run or hold or book my profits.
Okay, so I'm assuming this is for how long, if at all, you recommended to hold? How long will you be comfortable?
Around a year or more, by 2027 maybe.
Sure. All right. Osho, what's your recommendation? Slightly longer time horizon, but then on the charts, and especially his average price is 216. Your views on it?
Very good morning to all of you. Well, looking at the technical perspective of Patanjali, then in the last 2 years, the counter has been hovering in a very strong and consolidating near a zone of near to 600 to 650 kind of a zone. So I expect that at present, the counter is at a very strong support levels near about 570 to 560 is positional support for the counter, while on the higher end, again, 650 to be seen as the immediate hurdle. So I expect once it breaks down above the consolidation zone, then only we can see some kind of continued momentum. So 650 will be a crucial juncture for the counter. Once it surpasses the zone of 650, then we can see near about 80 to 90 points of upside movement from there onwards. So near about 730 to 740 40 will be the target from medium to long-term perspective in Patanjali, and currently it is hovering near to the support level, so no need of any caution or any tension to take in the counter. I expect that in a medium-term perspective, the counter has the potential to move beyond the zone of 700, and one should stay invested.
That's the take coming in on Patanjali. But sticking with the consumption basket, the next query that we have is coming in from Anil Kumar. And Rajesh, he needs a view on trend. What will be your advice? Just yesterday we have seen the Q2 updates coming in. It's a slower growth for the fifth consecutive quarter. And even today, the pressure continues, almost a 2.5% of decline.
4,100 odd levels, if it comes by any chance, it would be a good buy. Yes, in the short term, we have seen the rates coming very bad, despite the fact that the festive season sales were great this time. But we should not forget it has already seen quite a cut from their recent highs. Secondly, the growth in the stores is going very well. Be it Westside, be it Zudio, they are moving into lab-grown diamonds, they are moving into beauty. And the best part is the mass retailing part, that's Studio, and Star Bazaar is doing very well. Star Bazaar can be a good game changer going forward. So I think somebody having a long-term horizon can start nibbling around 41 or 4,200 odd rupees. Somebody holding the stocks should continue to hold.
All right, you are recommended to hold the counter. But then with that, it's time for a quick break. And post that also, we'll be answering your stock-specific queries. So just a short break and then we'll be back. From Coimbatore, and he's holding 1,200 shares of Ashok Leyland at an average price of 105, and he's looking to hold it for next 2 to 4 years. Rajesh, your take on the counter and also time horizon.
See, it's a good company, no doubt, doing very well in CV and all with some government orders. But the problem is the valuations are already on the optimum levels, and major upside from these levels is not in the near term. I don't think there would be. But long term, I think 170, 180 would be optimum level. But what I would suggest is why not switch to a better names in the auto packs only. Like the names of maybe a Hyundai or a Bajaj Auto would be a better bet.
All right, so that's the take coming in on the auto pack. Let's watch out for that. And along with that, the next query that we have is coming in from Reema from Tamil Nadu. Osho, what's your take coming in on Dixon Tech? She's holding 78 shares. Buy price is 16,780. What's the outlook here?
See, overall, the technical outlook for Dixon is still positive. The counter has seen a very strong movement from the zone of 14,000 towards 18,200 kind of a zone. But in the last few trading sessions, yes, no doubt the counter has seen some kind of corrective phase, and there has been a decent or very strong plunge for the short-term trader. But overall, from a medium to long-term perspective, the view on the technical front remains on the bullish front. I expect 18,000, 18,200 to be seen as the immediate hurdle. But the time it surpasses the zone of 18,200, then from there onwards, we can see another 2,000 point of rally on the higher end. So I am expecting nearly 19,500 to 20,000 kind of a zone for Dixon from medium to long-term perspective.
All right, so that's the take coming in on Dixon Tech. But let's move on to another query then, and this one is coming in on BSC as well as CDSL. And Osho, Satya Veni from Hyderabad needs a technical advice on two counters. Firstly is BSC. He's holding 90 shares. Buy price is 2,870 rupees. And the other one is CDSL, 85 in quantity. Buy price here is 1,880 rupees. At what price he can go ahead and average these two? What's your take?
Firstly, for BSC, then this counter have started gaining some strength from the oversold terrain. So I expect that in the short-term perspective, there is a chance for a decisive breakthrough in the counter. On the higher end, it will be advisable to start accumulating the counter once it surpasses the zone of 2350 on the higher end. Then on the short-term perspective, we can anticipate a sloping trendline breakout, and from there onwards, we can see a bullish reversal pattern in BSE. So 2350 will be the zone above which one should start accumulating this counter from medium term perspective. Now coming to CDSL, again this counter has the same kind of technical setup, but on the higher end I will be having a more bullish view once it surpasses the zone of 1600 on a sustainable basis, because for the past 2 times the counter have seen some kind of resistance around the zone of 1600. So once it surpasses the zone of 1600, then one can look for accumulating this counter from medium term perspective. On immediate basis, 1800 will be the target, but once it surpasses 1800 also, then we can see 1900, 1950 in the coming days. So overall, both the counters are looking bullish, but one should wait for a decisive and sustainable breakthrough to start accumulating.
All right. Let's take Mr. Govind Kumar's question from Hyderabad. And Rajesh, she's holding 6,000 share of GMR Power at the price of 129. And he wants to understand, should he be exiting now, or if at all he wants to, or if he's recommended to hold, he wants to keep the time horizon to 1 to 2 years, or is that a good time frame to hold on the stock also?
All the policies has been discounted in the market. It would be better to cut your losses around 115, 117 odd levels and switch to better names in the power sector, maybe a Torrent Power or a CDSL or better names. Even Tata Power looks good. So it's better to switch from GMR Power to these names.
So that's the take coming in on this particular counter. But with this, viewers, once again, time to slip into a very short break. Don't go anywhere. We will take more of your stock-related queries, but on the other side.
Caught up with him on the sidelines of the Global Fintech Fest to discuss the role that this sector will play in India's financial ecosystem.
GIFT City will play an important role in actually raising capital for this agenda. So, be it infrastructure financing or financing of manufacturing projects, raising debt and equity for all the kinds of businesses which are wanting to go global. So, all these opportunities are possible now in GIFT City. So, if I may put it in a single line, driven by this vision, we have moved and shifted a large part of the global financial marketplace, which the corporate India was accessing, to the doorstep, I think. So it now sits in GIFT City.
Right. A lot of banks have now set up there. Almost all the banks are there. But there has been news about the family offices also trying to have a setup there. So what are the obstacles which are still remaining, or this plan is still there?
So let me again go back to the point that IFSC is a platform to aid, assist, facilitate and support India's 24/7 agenda. So if you look at what India requires at this point of time, it requires a lot of capital. So our focus will largely remain inward. So to that extent, I think, though it's not as if we are stopping any outward business. There are many resident Indians who are now investing through our global access platform, the international global securities marketplace. But our focus will largely be, say 90% will remain on how to source capital and then make it available to Indian corporates, I think in a big way. I think both debt, equity and other kinds of financial services. So our focus has been on how we can attract private equity, family offices to come and set up inward teams. I think. So therefore, I will say that, like for instance, we have the sovereign wealth funds like Abu Dhabi Investment Authority. We have the Liechtenstein royal family, whose LGT is a very large investor in one of our funds. I think. So many individual family foundations, both NRIs, PIOs and others also are investing into India through funds in GIFT City. So the idea is largely inward. So though we are not opposed to anything outward. I think. So if family offices intend to invest outward through a fund in GIFT City by through the using the overseas investment rules which are regulated by the central bank, the RBI, then they are also welcome.
So the route needs to be finalized. It needs to be operationalized. The way regulators are okay, and that is why,
Yes.
all these steps can be taken in future. It's not a no-no.
Yes. So what we do is that we are completely aligned with what the thinking of the domestic regulators are. We are not working in
course.
isolation. So we work in close coordination with the SEBI, RBI, and we are also guided by the finance ministry. The Honorable Finance Minister chairs the financial sector. The Stability and Development Council, FSDC, where all the regulators coordinate and ensure that our policies are complementary and supportive of each other.
16-fold rise in beneficiary coverage. So not just you're saving, but actually you've reached a larger number of beneficiaries. Technology has facilitated it for us. So a shift from paper-based disbursals to direct digital transfer has ensured that public funds reach the people that they are meant for and not for ghost entities. So the DBT model presents a valuable lesson, and as the first spark, I would say, it can also absorb a lot more better technologies, better innovations, better ways of handling technology, and so on. You have a world out there for you all to be innovative, even about improving the DBT's efficiencies. So the contributions of startups, engineers, entrepreneurs, investors in this have been immense. So the Government of India's policy has actually to play its role in nurturing the growth and innovation of fintech sector through a balanced approach, balanced mix of policy support, digital public infrastructure, and forward-looking regulation has actually shown the results. I'll list, instead of getting into the details, Aadhaar, UPI, Account Aggregator Framework, DigiLocker. All of them have really decisively changed the contours of how public finance is handled for the betterment of the citizen. India has actually stepped decisively into the global AI arena with the launch of the $1.3 billion India AI mission. It is a comprehensive strategy spanning the entire AI value chain. And that is the reason I first of all wanted to say that amount, not in rupees, but in US dollars. Commissioning of 34,000 GPUs at concessional rates to spur innovation across startup ecosystem, researchers and academic institutions. Launch of the AI, which is India AI Data Sets Platform, AI Kosh as it's named, incorporating 2,000 plus verified and indigenous data sets, use case across sectors, and sandbox environment. Supporting development of 4 foundational LLMs that cater to India context by supporting vernacular languages and are multimodal in design. Setting up 4 centers of excellence and India Future AI Skills Program to boost India's AI talent pool. So these are first lot of steps that we have taken with the AI, meaning India AI mission. Now a word about the GIFT City. GIFT City is a bold vision, an initiative of the Honorable Prime Minister, Shri Narendra Modi, even when he was the Chief Minister of Gujarat. Now it is in a full bloom. It presents immense opportunities to the fintech sector. GIFT International Fintech Innovation Hub is the city's fintech incubator and accelerator where fintech startups can secure funding, obtain legal guidance, and scale their businesses. It has a network of industry experts, investors, mentors, and corporate bodies that will help fintech drive innovation and support them for their growth. Fintechs must leverage, I'll appeal to you all, you must leverage opportunities in the GIFT City. In this context, I'm pleased to launch today the foreign currency settlement system in the GIFT City. So that tells me I don't need to explain what it is. You're quite aware of the importance of such a step, and I'm indeed grateful to the GIFT Authority who are all present here